Hello and welcome. This is Dave Maddock with Maddock Associates to do a quick presentation to go through the Patient-Centered Outcomes Research Fee, also known as the PCORI Fee. During this presentation, we're going to explain what the PCORI Fee is, who needs to pay the fee, how to determine what the fee is, and how to pay the fee. Maddock Associates, we're your independent insurance broker, been in business for over 40 years. We help our clients manage all aspects of employee benefits, administration, educating employees, resolving claim issues, making sure the plan assets are used most effectively, getting the best benefits for the price, and helping you stay compliant with all the rules and regulations with healthcare. And that's what we're doing today with this PCORI Fee presentation. So disclaimer, Maddock Associates, we're not a tax accountant. The presentation is informational and not tax advice. Each company has different facts and circumstances which may not be addressed in this presentation. So make sure to consult a tax accountant before filing your tax documents. So what is the PCORI Fee? It's the Patient-Centered Outcome Research Institute. It's a fee that funds that institute, and that institute's there to help patients, clinicians, payers, and public market make informed health decisions by advancing comparative effective research. As I mentioned, the institute's funded by this fee, and the fees are widely known as PCORI Fee, although they may also be called the PCOR fees or the comparative effective research fees. I haven't really seen that. Basically, it's just PCORI. And the fees are temporary. However, it seems like we've been doing this for a long time. They're for plan years that ended on or after October 1, 2012, and they do not apply for plan years ending on or after October 1, 2019. So for some of you, this might be your last time filing the fee. So if your plan, let's say you're filing for, so we're talking about now, we're filing for plans ending in 2018. And so if your next plan is going to end like in November, December, or January of 2019 or 2020, then this will probably be your last time. But there'll be a lot of people who are going to be having plans that you're in the middle of plans are going to be ending in 2019 before October 1. So let's say you had a February renewal, your plan will end next into January 31st, 2019, so you have to do this fee one more time. The fees are due July 31st for the prior year. So the PCORI fee applies separately to specified health insurance policies and applicable self-insured health plans. It's based on the average number of lives covered under the policy. So if you have a fully insured plan, the insurance company will pay that fee, and that would be considered a specified health insurance policy. If you have a self-funded or level-funded plan, an HRA, health reimbursement arrangement, or an FSA that isn't exempt, so an FSA where the employer is contributing to the funds over $500, then the employer is going to be required to pay this fee. So how to determine the fee? It's based on the number of members for self-insured plans. So not just employees. So for self-insured plans, you have to look at the number of members. That would include employees, spouse, children, domestic partners, if that's applicable. But for the HRA or FSAs that are required to pay, that's you use the number of employees, and you don't have to worry about the number of members. So that makes it a little bit easier for HRAs. There's 3 different ways to determine the number of employees. The easiest way I'm going to cover is called the snapshot method for implanting employees or members. So the way you do the snapshot method, and the reason there's different methods of counting is that IRS understands throughout the year your enrollment is going to fluctuate, and it could fluctuate daily actually. So what snapshot's real simple. All you have to do is pick the same date in each quarter and average it throughout the year. One tip is just to look at your medical insurance billing statement, especially for HRAs. If you're looking at employers only, you just look at the medical insurance statement, and you can use that just to get your counts. The snapshot methods, here's an example. So this is a group that had a July 1 through June 30 plan year. And so what they're doing is they're just taking the first day of each quarter and looking at the number of members, and they're averaging out. So for July 1, they had 80 members, October 1, 88, January 1, 92, April 1, 90. So they just add those up, divide by 4, 88, that's their member count. It's really simple. So determining the fee. So the fee is different depending on what time of the year your plan ended. So if you look here from if your plan ended between January 1 and September 30th, then the fee is $2.39. The fee goes up if your plan ended between October 2018 and December 31st, 2018, and that would be $2.45. So this does go up every year based on some sort of inflation. And then the plan starting 2001, 2019 or later, actually that they wouldn't pay a fee because their plan would end after 2020. So that's nice. So paying the PCORI fee. The fees are reported and paid annually using the IRS Form 720. I guess I could click on this, see if that pops up. And then that fee is, or the form is really kind of a big form that includes all sorts of taxes. And so depending on your company, you may be filing this form quarterly. If you're only using this for PCORI fee, you don't have to worry about filing it quarterly. You would just file it once in the year. And what you do is you got to scroll way down here to section or part 133, and this is where the PCORI fee is at. And so going back to the presentation here, I did a snippet of that. And so the specified health insurance policies, that would be what the insurance companies would be filling out. So what we focus here is the applicable self-insured plan. So whether you have a self-funded plan, a level funded plan, or an HRA or an FSA plan that's required to file, you would use this section here. And in our example, you would put the average number of lives. That's the one you calculated using the snapshot method. And ours would be 88. And then there's the fee, and you take the number of lives times the fee, I'm sorry, the rate, and that gets you the fee. And then generally your fee is going to just be the tax as well. They have this, if you were like maybe an insurance company that had your own self-funded plan, you might have a couple different lines, but for most people that have like an HRA or just one self-funded plan, it's going to put the average number of lives here, multiplied by the rate. That's going to be the fee, and that would be the tax. Paying the fee. So the Form 720 is the quarterly form, but as I mentioned, you don't have to pay it once a year if you're only using it to pay the PCORI fee. The due date is July 31st. The PCORI fee should be filed on the second quarter 720 form ending June 30th. Please work with your accountant to verify the information on the 720 that you're submitting is correct. That is all the information I have for you. If you have any questions, give us a call, 800-875-4490. Thank you for listening.